Investing in China has always come with political risk. But this week, investors were jolted by a reminder of just how broad that risk can extend. Chinese regulators telling an entire for-profit industry that it needs to start operating like a nonprofit. The largest private education firms in the country left scrambling to restructure under edicts that largely prohibits them from making profits, raising capital, or going public.
There's always this kind of political risk or tail risk.
In addition to the education companies, property management firms like Evergrande and food delivery services like Meituan also were sold off after Beijing signaled tighter rules for both of those sectors. And internet platforms like Alibaba and Tencent, they've been under regulatory scrutiny now for months. Many of these companies had global backing from investors like Tiger Global and SoftBank Vision Fund. Hedge funds caught in the crosshairs, they now have the option of either marking down their portfolios or getting battered in a sell-off.
We've had a sort of a week watching the carnage without being caught by it, which is a nice place to be. And if you're a global investor, it's impossible to ignore China. It's the second biggest economy in the world.
Now, toward the end of the week, authorities in Beijing stepped in to calm the market. But by then, the damage was done. Billions of market value erased, and many companies, including Tencent, choosing to preemptively suspend new user registrations for some services.
We're on the verge of having platforms and companies that are so powerful and so influential in the political process that they're ungovernable.
Now, the current regulatory campaign looks a lot like the crackdown that began in late 2020 against Chinese internet giants like Alibaba and Ant Group. Beijing is seeking to increase scrutiny over data collection and overseas listings.
What the Chinese government is now doing is cracking down on the big companies that dominate various sectors at the exclusion of smaller companies.
Some investors are seeing a buying opportunity in the panic selling.
The more nervous they are, less people are going to be investing there. And for someone like us that's got long-term capital, we can end up doing exceptionally well out there.